Hi guys, Harry Yotis here, professional trader for over 20 years, started in 2005 and still going strong in 2026. So let's get going with today. Daily market update. This candle right here on a chart of the S&P 500. This candle right here is Friday, January 16th. It's over. What's over? Options expiry. Now what? What do we look forward to? Well, we'll get to that. But let's reiterate on options expiry. This green candle is Monday, and this entire week was up, down, up, down, up, choppy, exactly what we expected. And we speculated at the beginning of the week we should finish around 695 to 690, and we finished at 691.66 on the SPY. Perfect for the market makers, that is. They destroyed a lot of option premium, especially people going short. People got scared in this market this day with a wick, and they got short and they had to get destroyed, of course, because nothing really is happening right now. So it was a perfect environment to sell premium and let it expire worthless. Okay, so as always, let's go to the technical picture. It's bullish. We don't have to continue further with this. We're getting a wedge type formation here and a series of lower magnitude drops going into this move. I suspect we continue to go higher going forward, although it's going to be choppy, but we'll see. Okay, we have no idea yet. It's just speculation based on the fundamentals, the technicals, and we get to the sentiment. Okay, we have the greed now. This is the second day that we have greed. Okay, if you look at the sub indices, the market momentum is neutral because we're hovering around the same level for the whole week to destroy option premium. We have extreme greed and strength, and yet here, the put-call ratio is still at extreme fear. I don't know, is this broken? I don't know. Everything else is like neutral or extreme greed. So, yes, we're at greed. We have plenty of time to go into more greed and solidify ourselves into this bull market, because of right now, this bull market is still climbing a wall of worry. So that's why I suspect we drift higher. Okay, so as you can see, it's basically still bullish, and I'm expecting things to go higher in the weeks to come. So what now? Well, what now is the Fed. I guess the Fed meeting is coming up in 2 weeks, not next week, but the week after. If we could look at the Fedwatch tool here, it's going to be January 28th, so 2 Wednesdays from now. And of course, nothing's going to happen. They're going to keep everything at 3.5%. Okay, I think you have to go into, before we had April before they cut rates. Nope. In April, 65% chance that they're going to keep it the same. So basically, we have to go into June before there's a chance, a majority chance, I should say, that they're going to cut rates. So it used to be April, now they're putting into the summer. So basically, they're pushing back rate cuts. But is that bad for the market? No, the market could keep going up. And the reason they're doing this is because we keep telling you guys that the macro picture is not rolling over. We had initial claims coming in at 198,000 yesterday. And we mentioned it. We have GDP still going strong. We have jobs holding between 0 to 100,000 a month. It's not amazing, but it's still chugging along. So it's enough. And by the way, inflation is pretty much down. It's still sticky at, 2.5 to 3%. It's still sticky because, people still have jobs and they're spending. So that's why they're postponing this move all the way to June. So on the summertime, they're going to get the next cut. But it's not necessary for our bullish thesis, okay? It's just telling you that, the economic data is getting better. Or it's not rolling over as everybody was fearing that it would, especially with the Trump tariffs. The Trump tariffs are having a good effect, or they're not having an inflationary effect on the market yet. Okay, we'll have to see that. Inflation might be coming in later for other reasons, but as of right now, nothing to worry about, as witnessed by the Fed, economic data, etc. So let's go. So that's it. Nothing to worry about. So what should we look at today? Well, I like to look at gold and silver because those are the only things that seem to be persistently, consistently, and forever. I like that word, but I exaggerate. For a long time, they have a bid. Okay, a series of higher highs, higher lows. This is a perfect setup. Today, it went down and they bought it back. It's like gold is almost like stealth moving higher. Okay, and I don't think a lot of retail is in the gold space. I think a lot of retail is in the silver space, but not in the gold space. Okay, they think it's quote unquote too expensive. I just think this continues to power higher, especially with the geopolitical situation going forward. So I still like this space. I'm not re-entering it yet. Okay, the best re-entry was when it was here with the first crack after a solid move higher. The first crack and consolidation is when you want to buy. Okay, this is what I'm looking at. Another move lower to buy into it, okay, because I'm just riding what I have right now. And if you look at the RSI, I mean, nothing really, it's still going up. I mean, it's hovering near the highs. That's exactly what you should expect in a trend. Okay, you don't use the RSI to make moves when it comes to the trend. You're looking for a break and to go, and so you can enter long. You want a reason to go with a trend. Silver is the same thing. Silver today, they're trying to bring it down and it gets wicky right here, another wick. Okay, so they look like they're trying to sell it. It's trying to find a top. Again, this is very, very scary. Okay, we don't know what is going to happen. We are looking for some kind of technical reason to go long again. I don't think it goes up and then down exactly the same way, because this is fundamentally driven. There's going to be a demand for silver. There's going to be demand for copper. There's going to be demand for all the critical elements. Okay, so silver, wait and see. Gold, wait and see mode. Okay, and the last thing I'd like to talk to you about today is, remember we had our UUU trade. Okay, we bought it around here, the 1522 call. We got out of it completely yesterday. We made 5.5 times our money, and now we're waiting for it to go back down. However, UUU is not just a rare earth play, but it's also a uranium play. And what you should be looking at, which I still like this space, uranium, market leader of uranium, Cameco. Okay, new highs. It's almost the exact same chart here as UUU. See, big hit the highs, boom, consolidating, and then breaking out here. After this like double bottom situation, if you look at UUU, it's almost a mere carbon, 4 U's. See, drop up, down, and then a breakout situation here from this like double bottom. A breakout here continues. Okay, so CCJ is the market leader. You had a double bottom, break. Let's mark it so you guys can see it better. Break above this like neckline, if you will, from the double here, continues to go higher. This one is stronger. Okay, this is the market leader. This is what you want to be in. Again, I'm not entering it. I'm waiting for a technical reason to get back into this space. Okay, maybe a retest of the previous high at 109, 110. Who knows? We have to see. But yes, that's exactly what I'm looking for. These are stocks that are on my radar that I'm looking to play. Okay, so let's reiterate, guys. OPEX over. Now what? We're waiting for the Fed in a couple of weeks. Okay, will that be material? No, because everybody's expecting them to do nothing. And the reason they're expecting them to do nothing is because the economy is still doing good. So I am still bullish. Sentiment is still on our side, just barely into the greed one day. Okay, we might get like a market going up, down, like drops like this as the market goes up, which is what I expect to see. But we don't know. This is just pure speculation. I'm just net bullish on the market. Gold, loving it. Very stealthily going higher. We're at almost 4,600. Okay, and still nobody's really crazy about it. Okay. Silver is the one that everybody's crazy about. We all hear stories of silver, but gold is like going undercover, under the radar. So silver again, I'm gonna say it again 1,000 times. I'm not shorting. Okay, I don't want to go against the trend. What I did want to mention is that I did sell some covered calls. Okay, I have a position. I sold a little bit covered calls on silver because the premium was way too on SLV, because I have it on SLV, and I sold the hundreds. Okay, and I got a huge amount of premium for that. And if it gets there, I'll be glad to give up a portion of my silver. And I also did it for Hecla mining. Okay, I sold the 30s. I think it's getting parabolic a little bit. I'm still holding a position. I'm still expecting the same thing for Hecla as I expect for silver. Okay, and when the crack happens, I will be telling you guys when I buy in, and I'm going to buy into the majors, Hecla, Kerr Mining, CDE. Here, looking good. And Pan American. Okay, these are the ones I'm looking to enter in when the silver market cracks, okay, and consolidates. Okay, so and what else did we say? We said uranium. CCJ, loving the sector, waiting also same. It's the same deal over and over again, waiting for a technical reason to enter this fundamentally strong stock. So that's it, guys. Let's see what happens after OPEX. All of the grinding is over. New week ahead. Later.